I'm Matt Bouchard with REIT.com, and joining me for the CEO Spotlight is Rick Campo, Chairman and CEO of Camden Property Trust. So Rick, we've seen in the apartment sector, with very strong fundamentals, but the stocks themselves have underperformed some sectors this year. Do you think that's a case of investors possibly overstating the improvement we've seen in the single-family market, or underrating the growth that multifamily companies still have?
I think it's both. I think what's happening is the market believes that there's sort of a binary or not a non-binary situation with single family can do well, but multifamily can't do well, or multifamily does well, but single family doesn't. So I think that's definitely the case. I think there's sort of two big drivers. One is the idea that everyone is going to move out of apartments to buy a house. That's just not the case. Moving out to buy a house is really a demographic issue, and it's a lifestyle issue, not an issue of dollars and cents. And I think people don't get that. Single family and multifamily have done well together in good economic times, and the key is jobs and a positive economy and both sectors can actually do well. As a matter of fact, I am cheering for the multifamily or for the single family market to come back in a big way, because if we can really get the single family market going and you have job growth associated with that, which is what the economy lacks today, then our business will be much better.
And what are you seeing in your markets in terms of rental rates? What's driving the direction that they're going, and what's your forecast?
Well, rental rates are going up in all the markets that we're in. I think I don't know a market in the country where rental rates aren't going up. Even the most sort of difficult markets like Las Vegas is still going up. But with that said, rental rates are going up for real basic reasons. Why rental rates go up? It's supply and demand. There's a whole lot more supply or more demand than there is supply, and rental rates in some markets are up double digits. Every one of our markets, I think we have 9 markets where we have rental rates that are up double digits. Same store net operating income is, I think the third quarter net operating income was our best third quarter in the history of the company. So pretty amazing what's going on right now. And we don't see a lot of slowdown given the supply picture and the economy that we see.
And Camden is active both in acquiring assets as well as in developing new properties. What are you seeing, or where do you foresee the best returns in the coming year in those two areas?
Well, development is definitely the place where the best returns are being achieved right now, primarily because of this very incredibly low interest rate environment. Acquisition prices have been bid up pretty substantially, cap rates compressed dramatically, and the development side of the business has increased in terms of new starts, but if you got started early, you got the advantage of being a first mover with construction costs still very low, and then just no competition in the market. For example, in markets like Florida, where people kind of look at you and say, "You built properties in Tampa and Orlando? You're kidding me!" And those properties are leasing up at probably 3 to 4 quarters faster, lower construction costs than we budgeted, and much higher rents. So really incredibly good cash-on-cash yields in those properties.
And last question, I know it may be tough to narrow this down, but looking at the multifamily sector as a whole, what do you think is going to be the dominant trend in 2013?
I think the dominant trend in 2013 is that the market's going to see that multifamily hasn't fallen off the edge of the cliff, and that multifamily can, in fact, do really well when single family starts to recover. And I think the theme will be that in spite of maybe a slowing growth rate, the growth in multifamily incomes and cash flows is going to be probably the best in the REIT sector.
Well, Rick, thank you so much for joining us.
Thanks.
For more on this and other REIT news and analysis, be sure to visit REIT.com.